thank you so much for being here today. It's nice to see some familiar faces and meet new ones. Carolyn and I are presenting today on workflow efficiency and staff training for the accounting office. So the purpose of today's presentation is hopefully to provide you with additional perspective and insight regarding workflow efficiency and staff training. We hope you're able to take some useful nuggets that you can bring back to your accounting offices. So Carolyn and I combined have about 44 years of experience in automotive accounting. I worked as a controller for about 22 years. The work is actually what drew me in. I loved every aspect of the accounting office. That eventually shifted to wanting to fix broken processes and getting to the bottom of why things are done the way they are, not accepting, oh, that's how we've always done it. So putting together processes, coordinating with department managers and accounting personnel. I have a passion for people, working with them, training, mentoring. I've been able to witness employees who I supported and encouraged to go on and be controllers, assistant controllers, office manager, and so on. Coming to OCD was a no-brainer for me, since I have a passion for mentoring accounting staff and helping dealers with their accounting offices. I thoroughly enjoy watching people succeed and do well.
Hi. So like Yvette said, I also have years of experience in the dealership industry. I worked at a single Ford dealership for 18 years in various positions in the accounting department. Because I loved accounting so much, I received my master's degree in accounting, and I ventured away from automotive for a brief period. I worked in a public accounting firm, and I also worked for a plastics manufacturing company for several years. When this opportunity presented itself in March to come work for O'Connor and Drew, I jumped at the opportunity to be able to combine both my dealership experience and my accounting education. Kind of was exciting for me. So I love going back into dealerships and working with people in the office. I can relate to them. I've sat in their chairs. I've done their jobs before, and it's been really exciting.
So why is an efficient accounting office important? Well, the role of the accounting department is to report timely and accurate financial statements and to protect the assets of the dealership. In order for this to happen, it's important to have certain components in place. The accounting office may not be a revenue driver, but if it's running inefficiently or it's a poor work environment, it will end up costing you money. When an office is running efficiently, that usually is coupled with employee retention and accurate information, which in the long run does save money. So these are the components that we're going to be diving into a little deeper in the following slides. So the accounting office. When you think of an accounting office, what comes to mind? This reference was given to me from the first dealer, minority dealer that I worked for in Miami. He always referred to the accounting office as the heartbeat of the dealership. He actually wanted his office right next door. He made this known to any vendor that came in, any service provider that worked with the office. I didn't fully understand this until I saw the impact firsthand. When I moved up to Massachusetts, I started with a group that had officers rotate in and out like every 3 to 4 years. Various styles of management. The first several years, there was constant turnover, there was frustration, there was burnout. The integrity of the financial statement was compromised due to the fact that the office was spread so thin, they couldn't get to everything. The last few years, we had some officers that, they were supportive, they open-minded. And because of this environment, we were able to take the close from 10 to 15 days down to 4 to 5. That's the goal. You want to have that data when you need it. So much so that when, the group ended up selling, I was told that because the books were in such good shape, there wasn't any room for negotiation. And we didn't even have a heads up when they reviewed our books. So because the environment of support and the lines of communication were open, the end product was good.
So I love the idea that the accounting office is the heartbeat of the dealership. Yvette introduced me to that, and I really appreciate it. I love how this diagram also illustrates how the accounting office is kind of the center and everything flows into it. It doesn't mean they're the most important, it just means that they're kind of in the middle. Everything such as information, paperwork, the money, flows from all of the other departments into the accounting department. In order for the accounting office to run efficiently and to create the product that they're there to create, which is a financial statement, they do rely on all of the other dealers, the other operations of the dealership, the other departments. So, timely information, accurate information, all of those are needed in order for them to create their product.
Yeah, and one good exercise would be, like for a controller office manager, take the doc or whatever reporting tool that the department managers are using, go sit with them, 15 minutes. It's not going to take long. Just start the lines of communication, ask the questions. Do you understand what this affects? Maybe there's something that you can clarify, and then in turn, it's just creating that relationship, fostering that communication. It'll bring awareness to the department manager, and it should also create a culture of being proactive instead of reactive.
So what are we seeing when we go into dealerships who've reached out to us and asked us to come in for help? One of the main issues that we've seen is bank reconciliations are not always being done, or they're not being done regularly. And why is it so important to reconcile your cash? Well, for a lot of reasons. Revenue and expenses can go unrecognized and hide on the balance sheet if you're not looking at your cash, posting entries every single day. And that can lead to a large unexpected expense in 1 month, or a 13th month adjustment that you really don't want to make. If funding isn't posted daily, that could delay payoffs, and that could put you out of trust with your floor plan bank. If service fees, bank fees, the credit card fees are not posted regularly, those add up really quickly, and those can also sit out on the balance sheet or just go unposted. If you have department managers who are paid bonuses on the net, and you're not posting your expenses in the month that they occur, the bonuses could be calculated wrong. They could be inflated.
And prepaids and accruals. From what we've seen, I believe there's a lot of confusion around this. Prepaid, that's something that you're paying for in advance. It's going to be expensed over the period of so many months. It's typically a debit balance, positive. An accrual, it's something that you're setting up in anticipation for an expense, so that should be a credit. But we've seen contrabalances and accounts used that weren't intended for the purpose designed. It's important to make sure the accounting office understands how these accounts should be managed. A lot of times, they could be included in standard entry. The CFO, dealer, sit with your office manager, controller, understand what's going into these standard entries, setting them up for the following year, making sure you're accruing enough. And true these up on a monthly, preferably on a monthly basis, but quarterly, that should be acceptable, that should be fine, because, you'd be able to catch that expense and hit it as fast as you can.
So we're also seeing staff shortages, and that is in every industry, and dealerships are not exempt from that. So what can you do? You need to start being creative with how you handle these. Hiring from outside of the industry, I know that is something that people are tentative, to do. They're nervous about doing that. Mm-hmm. Cross-training the personnel you have now before those staff shortages occur, and really, because being short-staffed for a long period of time, if you don't have coverage, if you don't have cross-training, that can lead to mistakes, inaccuracies, sloppy work, which can lead to, expense.
Burnout, yeah, and expense, yeah, and burnout too. Mm-hmm. So burnout is real. I mean, I've experienced it. I've witnessed office managers cutting corners. If a rebate wasn't set up in the deal initially, you get a credit on your schedule. Oh, well, there's one not collected. Oh my goodness, it's hitting 365 days. Let me just, use this to write that off. I've seen it happen. So another area that cutting corners could happen would be with the stat data. I mean, the OEM uses this information for their own measurements to give you all information. So messy data can potentially lead to uninformed decisions. So ultimately, bad accounting and bad controls, exposes, it could expose you, which could include, which could lead to theft or inaccurate data. And if you have both together, that would definitely heighten the risk. So this is an automotive news article that I saw. And, here's an example of what can happen. Over the course of 3 years, this office manager stole about $50,000. She was a long-term employee of a family business who was trusted with sole access over accounts and payroll. To me, it doesn't sound like they were reviewing expenses or possibly the credit card statements. They might not have been looking at the balance sheet, prepaid specifically. She had the ability to hide these things. I was a first-hand witness to theft in accounting. We had internal controls in place. We had all the checks in one office. It was known to our accounting staff that you need dual signatures. It was also known that if you're a check signer, you don't cut a check. Well, because the payables person knew that she was the only person there with the CFO at the time, she knew that there was something wrong when he came in to pick up a check, especially when she didn't cut it. So she brought that to my attention. I immediately started digging, and unfortunately, I found we discovered that there was theft. This person was able to hide all of this in the prepaids and accruals. But the one caveat was he still had system access. So it's important when you're considering your check signers to make sure that they can't cut checks. They're not doing your bank recs. They don't have system admin access. Internal controls should be in place to protect the office and the dealer.
Yep.
From an owner's perspective, you're relying on one person, who you trust. And controllers, you should want the adequate controls in place in order to keep transparency.
Yep. Cutting corners can also create issues if you're not looking at your schedules, specifically the cash receipts journal, the cash receipt schedule. If that is allowed to get messy and you're not paying attention to it, cash can go missing. And I have seen cash go missing in this type of environment. I've seen a department manager that was borrowing from deposits, and not sending them up to the accounting department. If we hadn't been looking at that schedule, if that schedule wasn't clean, we wouldn't have realized that money was coming in that wasn't making it into our department. So if you're, that cash receipt schedule, the cash clearing schedule, they should be 0 every day after the deposits. And if they're 10 pages long with stuff that's 10 days old, you're not going to know if something's going missing. So bring it to the attention of somebody right away. If you're the office manager and you're looking at this and you know that money's not making it in, bring it to the attention of the owner. Nobody wants surprises like that. Another area to really pay attention to is payroll journals. You shouldn't have just one person looking at your payroll journals. What should you be looking at? Employees on that list who are receiving checks who don't work for your company anymore. Obviously, if you want to look into that one. Bonuses that were not approved. Make sure that salaries look reasonable and make sense. Make sure that withholdings and deductions look accurate, but really just pay attention to the payroll.
So here are some items that are coming into the accounting department from operations. One of the biggest item I would see at the controller level is the month-end timeline. I'd send out an email. I need deals done by the next day. I want payables in from parts the second day, but I communicated this as well to the people. So when a deal would come in 2 or 3 hours after the cutoff, they got a little bit discouraged, but we put it through. But it's important to have that support from the top down, especially when you're trying to get the close, because all it's going to, the close done timely and as accurate as possible. Because it's just delaying the close. It affects bonuses. Another issue that we see is check requests. You have a form, you want it filled out, you need it signed off. So this way, as soon as you get it to the office, it can be processed. But what happens if you're missing a signature, you're missing information? You have to email or you have to call, and it's just inefficient. So just supporting accounting when they're asking for something, it's huge. 8300s, these are due within 15 days. And if sales isn't collecting the information, social security numbers, that could be an additional cost incurred from penalties. So, supporting accounting when they're asking for items is important. Yeah.
Yeah, because when an accounting office is constantly chasing information or they're always fixing mistakes, they can't run efficiently and they can't, get the financial statement, the financial information out to you in a timely manner. So like Yvette said, when accounting is asking for a change in process or they're asking for new information, they're not doing it to make anybody's life miserable. They're doing it because for some reason their efficiency has been hindered and, they're trying to do their job.
Yep.
And inefficiencies can cost you a lot of money.
Yeah, definitely. So utilizing the DMS, the goal should be transparency. When we talk about utilizing the DMS, just as pretty much with everything, I got another update alert on my iPhone this morning. Everything's constantly evolving. The DMS is evolving as well. And accounting should not be exempt from this, and they should evolve as well, along with the DMS. There are so many applications and functions within the DMS that many people do not know about. Take the time to learn, about your DMS, and even when a new update occurs, it could possibly save time by helping with a process. There's a reason behind these changes. Like I said, the goal is ultimately transparency. You want the data to speak for itself without manipulation or multiple steps. Take advantage of the library of information in the DMS. It's a useful tool. I came to OCD primarily with CDK experience. I've been to several dealers that have other DMS providers than CDK, and I rely on that library so this way I can kind of get to where I need to get to, as fast as possible. I know we've said it already, but the bank rec is one area that we've seen been neglected. And the majority of the DMS providers, they have a tool inside the DMS that you're able to, set it up. You can, somebody goes in, it takes 15 minutes a day, possibly. Go in, just click off the items, make sure everything's posted. Like Carolyn said, with the, with funding, those need to be posted right away so you can get your, floor plan payoffs done timely. Another area is the accounting interface. I've seen with like F&I, for instance, the F&I interface into accounting. I've witnessed, changing the GL accounts, changing the PAC amounts because it's not updated in the mapping. Just communicating to the deal processor or deal clerk, hey, if you're inputting stuff, manually, make sure you let me know so I can go into the template and set it up properly. Because sometimes mistakes are caught when the schedules are cleaned, weekly, monthly, or possibly never. And again, this delays the revenue from being recognized timely. And a recent example I've seen is the floor plan assistant wasn't recognized. The deal clerk, she just was posting along. She knew, excuse me, she knew she had to look up the liability amount for the, floor plan assistants, but this was never communicated to anyone. And so what ended up happening is after like 2 to 3 months of her being gone, the office manager finally gets around to cleaning the schedule. There's all this revenue that was not recognized, and it wasn't caught. You'd think that you'd see it on the financial statement, but it wasn't caught. So not only was this not recognized timely and in the correct month, who knows if there was anything else missed. Think about F&I products. There's so many F&I products. Itemizing these from F&I, making sure that you have all the right buckets in accounting. It's only going to make the job easier for the payable person that has to pay these bills. I don't need to tell you the liability and exposure from not having a gap paid timely. So taking the time initially to set this up correctly from the get-go will hopefully set the controls in place to reduce the risk of exposure.
So what are the additional tools that you could use for your accounting office to help them become more efficient? So like Yvette said, the DMS, use that first and use it to its fullest potential for bank recs, any reports that might be helpful. But there are other tools, there are other softwares that you can use. Excel, a lot of people are afraid of Excel. It's really not as scary as it seems. You don't have to be able to do pivot tables to be able to use it and organize information, manipulate data. Power Query is available through Excel that can do a lot of the tools, and really you can just Google these things and get little free online tutorials also. Google Sheets is free. A great example would to have a shared Google Sheet. and have the department manager have availability, have access to that. He can put in bonus information monthly. He can put in the quarterly, not quarterly, the objectives, the CSI,
Yeah, the CSI
all
yeah.
the data, and then accounting can also access it and calculate the bonuses. It would make things more efficient. There's less need for like communication, emails, meetings, phone calls, all of that sort of thing. In third party are also tools that you can use. There's a lot of third party service providers. It might be a nominal fee up front, but in the long run, it could help you with efficiency. It could help you save money.
So expectations, inspecting what you're expecting. When you talk about expectations, they need to be communicated and spelled out. If you're not communicating the deadlines for, month end, or what schedules you want someone to, to be responsible for, you're not going to get the outcome that you'd expect. So how you do that is by clearly defining the job and outlining the required tasks.
And what comes after setting the expectations? Following up and reviewing it. If you use checklists with your employees, that's a great tool to do what Yvette said, is set the expectation, list out what their tasks are, what has to get done, when it has to get done. But then look at that, follow up with the employee, look at the schedules, look at the work that they're doing, make sure that they're actually completing the tasks that have been, assigned, and hold them accountable. Obviously, if you're setting the expectation and they're not, you look at a schedule and it's a complete disaster after month end, follow up, don't let it go.
Yeah. All right, so communication. One area that I feel would be beneficial are the manager meetings. I think that it's important to have either your office manager or your controller in the departmental meetings. It's going to continue to open up the lines of communication. There could be something, a new service provider, something that you're talking about in the department meeting, and the department managers may not think that accounting may need to be involved, but there's something they pick up on it. Oh no, we need to be involved in this. We have accounting setups that need to be done. So it's definitely beneficial to have an accounting representative in your department, in the manager's meeting. It doesn't have to be everyone, maybe once a month, but it would be helpful. And I also wanted to touch on, have an open dialogue between the dealer, the owner, and the dealer, the GM, and the controller. Respectful, positive, and negative feedback is vital. Don't let it fester. It creates resentment, and it could blow up to be something worse that possibly could have been avoided.
And why is communication important when you're introducing new service providers or new processes or programs? A lot of times, departments don't realize that it could have an impact on accounting. If you're bringing in a new provider, such as Sunbet, there's a setup process for the accounting. What do they need to do in order to put this into action? Don't wait until the customer's there and ready to, finance their RO, and then, call up accounting and be like, hey, what do we need to do to get this done? Just give them some time, because there are a lot of times, they might have to set up a portal with a third party in order to receive payments or make payments. They might have to map new products, such as F&I and that sort of thing. So again, to tie into what Yvette was saying, if you include them in meetings, they might become aware of a new process and go, oh, hey, you know what? We might need to be involved in this.
So training, setting up your staff for success. So these are the elements for staff training that we're going to be talking about over the next few slides.
Hiring. So as we have mentioned earlier, there are staff shortages. It's making the hiring process a lot more challenging. One of the suggestions we have is to hire quality over experience. We know that it is easier to train somebody who has worked at a dealership before. There is no question about that. However, the applicant pool is pretty small. If you cast your net wider, you will get more applicants, and you may be surprised that somebody is able to bring something from another industry that can be used. Like I said, I worked in the plastics manufacturer for 3 years, and while it was very, very different than dealership, I learned a lot and have been able to apply some of the stuff that I learned. So keep an open mind when you're interviewing. Look for enthusiasm, look for inspiration, because a lot of times motivation to do a great job, they're going to be easier to train than somebody who's been doing it for 20 years and thinks that their way is the only way to do it. And look at the talents and strengths within your department already. You might have an opening for a deal clerk. Don't limit yourself to only hiring for that position. You might have somebody in the office or a cashier or a receptionist who wants to move up, who wants to learn something new. If you have an employee who is seeking that opportunity and wants a change, we suggest that you listen to them, move them over. Don't keep them in a job because it's more convenient for you, because otherwise you're going to be hiring for 2 positions and not 1.
So here's another automotive news article that I found, talking about mentoring. This group ended up focusing on health, finance, and relationships. It was the workers' lives. It wasn't the job itself. And this is a great example of, innovative thinking and, cut turnover. I think this is a great idea. So job description. So obviously the goal is retaining employees and limiting the amount of training that is needed. So every seat in the office should have a job description, some sort of guide to go by. And it's okay to change them and be flexible, but it's important to at least, to make sure that you have this guide and that you're updating it, especially if an employee takes on more. Update the job description yearly upon performance review. Things change. It's important that the job description is aligning with what they're doing.
If someone leaves suddenly, do you know what they were doing every day? If you don't have a job description, if you haven't been having conversations with them, you could find that things are slipping through the cracks after they leave. If they were doing something and never told you, and it's not going to get done if you didn't know about it. So again, communication, and like Yvette said, update those regularly with job reviews.
And measuring and accountability. Performance reviews is a good time to do this, but addressing issues as they come up is equally important, in holding the staff accountable.
And why do we talk about growth when we talk about job descriptions? Because the number one question that most people ask in a job interview is there opportunity, is there room to grow? Most people want opportunity, most people want to eventually make more money. Growth, career paths are important. So when you create these job descriptions and when you go over them with people, find out if they want to do more, find out if they want to take on more responsibility. You'd be surprised that you might be able to combine 2 jobs into 1 if you have a really motivated person. So really, again, communication, and think about what the employee wants, and think about growth.
So checklists, again, they should be based on the job description, and I always suggest daily, weekly, and monthly. So they should be all encompassing of a person's job, down to the schedules and GL accounts that they're responsible for. You can make this as granular as you want. There can be a separate checklist for schedules. This is a quick first step that you could implement almost immediately. This will help make sure that everything is captured and complete. Until someone's job becomes second nature to them, it can serve as a reminder and a training tool. You could go as far as having them sign off and turn it into you. Again, setting the expectation with clear instructions. You have your timeline for month end, you have deadlines to meet. So making sure that you're communicating these, and with the checklist, that will definitely help.
Cross-training. We've mentioned it a couple of times, but we really can't emphasize it enough. When your office is operating with a full staff, things are running smoothly, everything's going well, that is the time when you need to think about cross-training. If you wait until somebody leaves and now one person's trying to do 2 jobs, you're not going to have time to cross-train. Things are gonna slip, and that's when you're going to run into trouble. So think about also when you're planning on cross-training. Every every desk should have a backup. Every person in the accounting department should have a backup. But look at who you're cross-training. Try to find jobs that are somewhat related, where the other person might have a foundation or some information, some knowledge already. A deal clerk and the registry clerk, for example. They're both kind of looking at the same paperwork, familiar with the same lingo, so it's going to be easier to train the two of them together. Or the person who handles deposits, train them on accounts receivable and vice versa. So just try to look for positions that are related, because it will cut down on your cross-training time spent, and it'll be easier for the people to jump in and cover.
And mentoring, like I said, this is something that I enjoy. Taking the time to learn about your staff's strengths and weaknesses, it'll give you the insight needed to find that right person to mentor. Or, if you have someone that's in a position and they don't like it, but they like the idea of bank recs, maybe you move that deal clerk over to, handle the bank recs. It's just good for you to have that, that insight. In my experience, I utilize the performance review to talk to the staff about their goals, which gave me an idea of who wanted to grow. I was able to mentor an assistant controller who is now thriving in his position. After we had the initial discussion that he wanted to grow and learn, I ended up setting up a time frame for these items that he wanted to learn, which kept us both, it held us both accountable and kept us on track. For instance, the month-end entries. I created an Excel spreadsheet. I had a tab for each one. I put as much detail in there as possible. I ended up having to go out unexpectedly, and he was able to cover. And the financial statement was still submitted within the 5 days, which was great. So you want to be grooming your replacement. There's always plenty to do in a dealership. I can't, this, so don't shy away from grooming your replacement because you're concerned you're going to not have anything to do. Additional items to consider when choosing a person to mentor would be leadership training. A lot of times I've seen, a deal person be brought up to an office manager position, but she doesn't know how to talk to your people. Just having a conversation, again, setting that expectation. This is our culture, and this is how I want you to talk to the employees that you're supervising, such as drafting emails, and just communicating.
So even a fully cross-trained office, if they're faced with a long-term staff shortage, it might not be enough to be cross-trained. So don't wait too long to ask for help from an outside party. Yvette and I go in and there are people who can help, like with hiring, with training, covering a job, if you have an empty desk or whatnot, but try not to operate too long in that condition of being short-staffed.
Yep, it causes burnout and the possibility, excuse me, of further staffing issues, because people have taken on too much. They may feel overwhelmed, or, you potentially could lose more employees. So don't wait too long to ask for help, definitely. So performance reviews and goal settings. Why, I feel this is important because it opens up the lines of communication. The performance reviews that I utilized, it was 2 parts. I handed one to the employee. I made them grade themselves, good, excellent, fair, whatever. I wanted to see how they felt they were doing. And then I graded them. And then we kind of came together and we talked about it. It's all good stuff that can come out of it. It just, setting up that expectation, discussing their job, when working through goal setting during the performance review, it gives the employees something to attain and reach for, which in turn empowers the employee.
Generally, walking away from a job review or a performance review is usually a positive experience. Even if there is, criticism during the review, obviously you're going to want to tie it with some positive, end it on a positive note. But most people walk away feeling valued that you took the time to sit down with them and review their performance. Make sure that you stress why their job is important, why they're important, and how they impact the dealership. Yeah. When people feel, when somebody hears that, it gives them a sense of being appreciated, being recognized, and it can go a long way. recognition and praise can go a long way. And like Yvette said, it can empower people and make them, maybe motivate them to work even harder.
Yeah, and when talking about performance reviews, it doesn't necessarily have to come with a monetary increase. I had a deposit clerk. She was there for, I think she made it to 50 years. She worked there. It got to the point where she was capped at what I could give her, and she understood, but she still appreciated those yearly reviews that I'd sit down, I'd talk to her, I'd take the time just to listen, what her struggles were, tried to help her, and that meant a lot to her, just taking the time to listen. Even though it didn't come with an increase, she was still very appreciative. So in conclusion, basically as technology evolves, the DMS evolves, the accounting office, they should be evolving as well. Looking at and assessing your processes and controls, think about continuous improvement, it's a constant work in process. So, I feel like we got through that really quick.
Not bad.
But I didn't know if anybody had any questions. I want to open it. Yes.
Yes, if you were shopping for DMS today with your experience,
Ooh.
which ones would be on your short list to look at?
Well, we're both CDK trained, so if you were asking me what I would want to work on, because that is where I worked for 18 years, I would say to CDK, but I have also seen other ones. I haven't seen one that is terrible, so I don't know, maybe.
Yeah,
maybe
so, PBS, dealer track. PBS, dealer track, CDK. Those are the ones that, primarily I've been working with. Excuse me. Those are the ones that
That's a tough question.
Yeah, that is a tough question. Anyone else? We're also going to be here, so if you want to come grab us at any time, we'd love to talk to you if you have any other questions.
Great.
All right.
Great. Thank you.